Everybody in investing looks up to people like Warren Buffett, the Oracle of Omaha, and takes what he says really seriously. He does have a number of basic rules for investing. So, what is his number one? It's don't lose money. Never invest in a business that you don't understand. His favourite holding position is forever. Never invest with borrowed money. And be fearful when others are greedy. That's all well and good, but what can we actually learn from him in this current time? Let's think about what's been going on in the world. We've had the tech lender Silicon Valley Bank abruptly collapse, and that happened a couple of weeks ago. We have Credit Suisse, the rival to UBS in Switzerland, about to collapse, and the talks are ongoing to figure out will UBS actually bail them out. Towards the tail end of last week, we saw basically all the European markets closing down. You've got the FTSE 100 down about 1%, 250 is down 1.53%, the same in Amsterdam, Paris, Frankfurt, Madrid down even more. Asian markets not doing too badly. And commodities like Brent crude oil futures down almost 3%, which I suppose actually isn't too bad because that price is starting to come down per barrel. And linking back to all of these banking stocks, should we be worried? Let's listen to some of the stares that good old Warren Buffett might give us. Over the past month, the FTSE 100 is down 8.5%, whereas the S&P 500 is down 2%. Things aren't looking particularly good. But let's think of what Warren Buffett says. Be fearful when others are greedy. What's the flip of that? Be greedy when others are fearful. This is a buying opportunity for us. So the good old man himself does say, take advantage when others are being fearful. And if you think about it, he wrote those words during the global financial crisis of 2007-2009. And actually, at that time, he put 100% of his wealth into US stocks. And what happened after that? We ended up seeing an explosion in the stock market, and he made an absolute killing as usual, because he tends to get it quite right. Another thing he also says is best chance to deploy capital is when things are going down. What does this all mean? It basically means as the price is going down, it's a sale. What do we do when we go to our New Year's sales? We buy things that are at a discount. Stuff is at a discount. And I'm looking to deploy some money into the markets very shortly because some of the stocks that I have my eye on are hitting those price purchase points that I've been looking for. And it will enable me to actually buy in below my average buy-in price for a number of my favourite stocks and ETFs. Why wouldn't you take advantage of a sale? All you're going to manage to achieve is buy more stocks with the same amount of money. No-brainer. Something else that we learned from him as well is bad news is the investor's best friend. It lets you buy a slice of America's future at a marked down price. That leads back to that previous one of buy things when they're on a sale. And this is what he has done in the past. I know it is quite counterintuitive to buy things as you see the stock market going down. But if we have a look at this chart of the S&P 500, we can see over the past 5 years, there have been dips. So we have a dip in 2019. We have the big drop in coronavirus. We have little blips on the way as we drop, and then we've dropped down. Buy while things are on sale. And let's have a look at what the S&P 500 has done over time. And over that time period that we see on the chart, all that we see is the price dips and then recovers. And hopefully that is what is going to happen. If you believe in the US market, as Warren Buffett does, he basically said he is recommending that his wife literally just buys with his money a simple ETF tracker that will track the S&P 500. So if you believe that things will grow again, why not buy things when they're cheap? And I know it takes guts. Just take that deep breath, and do what Warren did around the dot-com bubble, the financial crisis of 2008, and once again in the spring of 2020 when COVID hit. Take advantage and buy with what you can afford. And as we always say, do not be putting money into the stock market that you can afford to lose. Make sure you have all your day-to-day expenses covered before you start deploying money. His key things is never take debt to buy into the stock market. The final one that I'm going to throw in here is just buy something for less than it's worth. What you can do is have a look at what you believe the fair value of a stock is, and what you could do is use something like Simply Wall Street to help you identify what that fair value is. And let's have a quick look at one. I do think that Legal & General is a good company. It isn't the same as a bank. It is an insurance company, and thanks to one of my subscribers, Nigel, has suggested why don't I do a head-to-head, and I'm going to be doing a video in the near future looking at Legal & General versus Aviva, but using the Simply Wall Street tool. And if you want, you can get a free couple of weeks playing around with the system, just see what it can do and see is it something that might help you. But it does a share price to fair value, and it has a look at future cash flows and does a bit of a discounted cash model to work out how undervalued the stock actually is. And if we look at Legal & General, suggesting 6.52% undervalued. So why wouldn't you be buying if you believe in the company and you believe in the management? All of these great things that Warren always tells us about. Does it have a good, strong management? Do you understand what the company does? And do you believe it is at a discount? And this, I believe, is at a discount. So I think I will be buying some more over the next week or so. I suppose we don't know whether we are at the bottom of this latest shock or not. It could continue to keep going down. What I will do is I will pound cost average into some of my new positions or my enlarged positions just to make sure that I can level off, because what I don't want to do is put all of my spare capital into the stock market at the moment and find out that we continue to go down. There is potentially another 10, 15, 20% of a drop still to come, because we have things coming up this week. We have the Fed with its interest rate hike. Are they going to be hawkish or dovish? Who knows? But potentially going to get another 25 basis points put on the interest rates in the States. And that might have further knock-ons to the whole stock market. But let's wait and see. I think what would be useful is have a quick look at this video and give you some ideas of potentially what kind of ETFs or dividend stocks to invest into or have a look at and see, is that something that you want to buy at a discount? Thanks very much for watching, and we'll see you in the next one. Bye.